Hello, this is Dr. Hasnat. Uh, Today we are going to describe about long-term assets and liability management. Okay, so we will cover this topic for final exam, like what would be the content for long-term assets and liability management in financial management, international financial management. The contents are direct foreign investment or foreign direct investment, which is called FDI, multinational capital budgeting, international corporate governance and control, country risk analysis, multinational capital structure and cost of capital, long-term debt financing. Okay. So today we are going to describe about direct foreign investment, foreign direct investment or FDI. So this is very important topic for long-term asset management, liability management in international finance. So what is the foreign direct investment, or what do we understand by foreign direct investment? The investment that is invested directly by a foreign country, or a fund that has been created by a country and intend to invest to another country. Okay, the term foreign direct investment actually refers to an ownership stake in a foreign company or project made by an investor, company or government from another country. FDI is generally used to describe a business decision to acquire a substantial stake in a foreign country. Or to buy it outright to expand operations to a new region. For example, I am a reputed business in my country, a renowned business, and I got the reputation by operating on my business, and I have the loyalty to consumers, or I have customers' loyalty to my company. Now I need to extend or expand my business nationally and internationally as well. So if I want to extend my business internationally through franchisee, could be licensing or joint venture, I can move forward to it through foreign direct investment. The term is usually not used to describe a stock investment in a foreign company alone. It's something more than that. It could be, but it's more than that. FDI is a key element in international economic integration because it creates stable and long-lasting links between economics. If I or a company intends to invest to other country, that means it also links to the economic relationship between two countries. The country that has been invested, or the country and the country that is investing. Key points actually, what are the key points for this? A foreign direct investment is a substantial lasting investment made by a company or government into a foreign concern. Okay. FDI investors typically take controlling positions in domestic funds or joint ventures and are actively involved in their management. The investment may involve acquiring a source of materials, expanding a company's footprint and developing a multinational presence. That means it doesn't mean that you are just investing, but you may involve acquiring a source of materials. Maybe you may need to have some materials. You need to produce something, but you don't have this material. So now you need to deal with other countries that have these materials. So this is how actually a foreign direct investment dealing could happen. Okay, and this could be a bilateral program, maybe, for the economic purpose. Okay, and expanding a company's footprint. Okay, you are extending or you are expanding your business to international market or developing a multinational presence, maybe one or two or more than two countries involved in the same business, right? The top recipients of FDI over the past several years have been United States and China. So United States took place as the first position, and China China is the second one. Okay, the US and other OECD countries are top contributors to FDI beyond their borders. So what are OECD countries? OECD stands for the Organization for Economic Cooperation and Development. Okay, the Organization for Economic Cooperation and Development actually is a unique forum where the governments of 37 democracies with market-based economies collaborate to develop policy standards to promote substantial or sustainable economic growth. So sustainable economic growth is very important to develop something, right? You are investing a big amount of money, and the concern should be where you are actually investing to. Could it be harmful to the environment? Could it be harmful to the green economy? If it's not, then yeah, of course, it would integrate sustainable economic development, economic growth. Okay. So whatever the policy is, this must develop a policy standard to promote sustainable development goals. Okay. So what are the member countries? Member countries of OECD: Austria, Belgium, Canada, Denmark, France, West Germany, Greece, Ireland, Italy, Luxembourg, Netherlands, Norway, Portugal, Spain, Sweden, Switzerland, Turkey, United Kingdom, United States of America. These are the 37 countries, democratic countries, not autocratic, right? Okay. So how does foreign direct investment work? How does foreign direct investment work? Companies or government considering an FDI generally consider target firms or projects in open economies that offer a skilled workforce and above average growth prospects for the investors. Okay. Companies or governments considering an FDI who are investing directly generally consider target firms or projects in open economies that offer a skilled workforce and above average growth prospect for the investors. Another one, FDI frequently goes beyond mere capital investment. It may also include the provision of management, technology, and equipment. So, what it includes? The provision of management, technology, and equipment. You need to have those things. A key feature of FDI is that it establishes effective control of the foreign business. A key feature of FDI is that it establishes effective control of the foreign business. Okay? If you don't have control on your investment or to the project, then it would be really harmful for you to conduct your business, or it will hamper you to conduct your business, right? So here we see the net amount of money involved with FDI are substantial, with roughly $1.28 trillion of foreign direct investment made in 2022. In that year, this is the net amount of money involved in FDI, right? In total amount of money. In that year, 2022, the United States was the top FDI destination worldwide among this amount of money, okay? I mean, in this amount of money, followed by China, Brazil, Australia, and Canada. So after United States, China, Brazil, Australia, and Canada involved in these things. In terms of FDI outflows, United States was also the leader. Okay, this is inflow. In terms of inflow, okay, money inflow, money involved, the net amount money involved with the FDI. Okay, and in terms of FDI outflows, it's going outside of the country. I mean, they are investing now. Okay, in the previous context, some other countries are investing to the United States, China, Brazil, Australia, and Canada. So in terms of FDI outflows, the United States was also the leader, followed by Japan, China, Germany, and the United Kingdom. So USA is always in the top in inflow and outflow of the FDI funds. Okay. How about Bangladesh? Maybe this is the time to bring this foreign direct investment to Bangladesh Bangladesh to have this development, remarkable development that we are thinking now, right? Okay. So there are some scenarios, some statistics that will comprehend you more about this topic, the foreign direct investment. Okay, FDI inflows. So we are talking about now inflows. Okay, FDI inflows as a percentage of gross domestic product are a good indicator of nation's appeal as a long-term investment destination. So FDI inflows as a percentage of gross domestic product. If FDI comes and involved into the percentage of domestic product, gross domestic product, I mean GDP, that would be a great indicator, a good indicator of a nation's appeal as a long-term investment destination. You understand? So for example, China's economy is currently smaller than US economy in nominal terms. FDI as a percentage of GDP in 2022 was only 1% for China, compared with 1.5 for the US. For smaller dynamic economies, FDI as a percentage of GDP is often significantly higher. For smaller and dynamic economics, FDI as a percentage of GDP is often significantly higher. For instance, it represented 359.2% for the Cayman Island and 33.6% for Hong Kong in 2022. So now, in this war, this national crisis, Bangladesh got heavy damage, right? Heavy damage in their constructions, in their buildings, in their bridge, metro rails, so many things. So, if now Professor Dr. Muhammad Yunus, the chief advisor in the government right now, in the interim government right now, of course, will try to invite so many countries in so many Western countries to involve in foreign direct investment to this country. So he will try to bring a lot of foreign direct investment to this country to develop those damage. We hope so. We are hoping for the best, right? So, special considerations, foreign direct investments can be made in a variety of ways, including opening a subsidiary or associate company in a foreign country, acquiring a controlling interest in an existing foreign company, or by means of merger and joint venture with a foreign company. So what is the special consideration? Foreign direct investment can be made in a variety of ways. What are the ways? Including opening a subsidiary or associate company in a foreign country. Okay? Including opening a subsidiary or associate company in a foreign country, acquiring a controlling interest in an existing foreign companies, or by means of a merger and joint venture with a foreign company. So this is how actually foreign direct investments can be made. What is another way to have this? The threshold for an FDI that establishes a controlling interest per guidelines established by the Organization for Economic Cooperation and Development, by the OECD, is a minimum 10% ownership stake in a foreign-based company. Is a minimum 10% ownership stake in a foreign-based companies. The definition is flexible, but there are instances in which effective controlling interest in a firm can be established by acquiring less than 10% of the company's voting share. So this is how actually we can involve in a foreign direct investment. So this is one way to establish a country, right? 10% you have to establish. You have to establish a way by the Organization for Economic Cooperation and Development, OECD, is a minimum of 10% ownership stake in a foreign-based company. The definition is flexible. There are instances in which effective controlling interest in a firm can be established. There are instances in which effective controlling interest, this is the term, effective controlling interest in a firm can be established by acquiring less than 10% of the company's voting share. And China dislodged the US in 2020 as the top draw for total investment, attracting $163 billion compared with the investment in the USA, $134 billion. In 2021, global FDI bounced back by 88%. So this is a scenario, this is a normal scenario actually. So in the next class actually we will discuss about the types of foreign direct investment, okay, types of foreign direct investments, examples of foreign direct investment, and what is the difference between foreign direct investment and foreign portfolio investments. What are the advantages and disadvantages of foreign direct investment? Some examples of foreign direct investment, One Belt Road it involves, and so on. Okay. So we are concluding the topic here. Thank you very much for listening.